Right. Good evening, everyone. I hope you guys can hear me. Am I audible, guys?
Yes, sir.
Great. Awesome. Right. So today, let's try to do a quick recap on few of the topics through questions. I mean, few of the chapters in your syllabus with what do you call some questions. So we'll be planning around a 2 hour class today. So I'll share the questions with you and I'll give you an exact time depending on the time. Do the questions on your own first, then we'll start discussing. Sounds like a plan? Abdullah, Lankesh, are we okay?
Yes, sir.
Awesome. So I have 5 questions here, which are very much straightforward. We are looking at only on the first chapter on these questions. So all are multiple choice, like section A type questions. So 5 questions means maybe around maximum 10 minutes. Would you guys be quickly able to draft the answers for these 5 questions? Right. So let's start now, guys. 10 minutes. Quickly jot down the answers for these 5 questions. Then we'll start discussing on that. Let me share the same questions in your WhatsApp group as well. All right, questions are shared there as well. So, guys, quickly jot down the answers for this one. You guys have 10 minutes, then we'll start discussing one after another. All right, great. I got answers from two of y'all, Ijaz and Abdullah. Okay, we'll start discussing. So, what is not a direct tax out of the below taxes? So, first of all, guys, what I want to say, tell you guys is, let's have a quick recap on what is this direct taxes and what is the indirect taxes, because even in your pre-mark paper, there were questions around, 2-mark questions around distinguishing between direct taxes and indirect taxes and distinguishing between revenue taxes and capital taxes. So those kind of questions were there even in your pre-mock. So that means there is a possibility of testing these kind of small areas as well. So direct tax means a tax that has been directly imposed on a revenue or a profit, and you cannot transfer this tax to anyone else. Taxpayer himself has to go and make the tax payment, right? Indirect taxes is where you can simply transfer the burden of the tax to another person. So out of these, income tax is a direct one. You cannot ask anyone else to pay the income tax on behalf of you. Same for the corporation tax. Same for the capital gains tax. But value added tax, on the other hand, that is a transferable one. So if unless you are not the final consumer, you can gradually transfer to the next party in the line. So the correct answer would be D. I saw that most of y'all has picked the correct answer. But out of these ones, can you distinguish these taxes between revenue taxes and the capital taxes? Income tax, is it a revenue tax or a capital tax? Okay, I got one answer as revenue. Abdullah, yes means okay, revenue, great. Ijaz, Azmira, how about your thoughts? Income tax, is it a revenue tax or a capital tax? Super. How about the corporation tax? Both. Revenue, not sure. Abdullah, how about you? Revenue, right? So corporation also, guys, more or less, it's I would say I would go ahead with Elankesh actually, because even the chargeable gains are included in the corporation tax itself, isn't it? So it's not purely based on the revenue itself. Part of the, chargeable gains are also coming under the corporation tax. They don't have a separate tax for chargeable gains. So even the capital gains are taxed at the corporation tax itself. So I would rather say Elankesh's answer is also that would be the correct one. It covers both aspects like revenue as well as the capital aspect of the business. Yes, I agree with you, Alankesh. It's more or less like covering both aspects since chargeable gains are also considered under corporation tax itself. Azmira, Ijaz, Abdullah, are you okay with that point? Great. Then what about the capital gains tax? Is it a revenue tax or a capital tax? Okay, I got one answer as capital, two as capital. Right. Yes, I also agree that is a capital tax. Good. Value added tax? Okay, I got one answer as neither. The others? Value added tax. None. Okay. All right, great. Yes, I also agree. So value added tax is not a capital tax. It is not a revenue tax as well. So it doesn't come under that category itself. Good. So I hope now we are clear on how to distinguish between direct, indirect taxes and revenue, non-revenue taxes. Good job. Question number 2. Out of the below, which is not a capital tax? Okay, so already you guys might know the answer. So Azmira, Ijaz, how about you guys? No, Ijaz said. Azmira, Elankesh? Correct. National insurance contribution is not a capital tax. That is similar to income tax. That is also a revenue tax. Good job. All right, then question number 3. Finn was born in UK, but throughout the year was working outside the country while staying at his home in France. What will be his residential status for the income tax purposes? Elankesh, Azmira, how about you guys? Because Ijaz and Abdullah has already sent the answers. Okay, Elankesh believes it's automatic non-resident. Azmira, resident. Okay. I would say he is a non-resident because he's full-time working outside UK, right? So he's working full-time outside UK and he's resided also in France at the moment. So seems like he classifies under the automatic non-UK residency tests. Azmira, are we good? Please go ahead, Elankesh. What is the doubt you have? Okay, he's a citizen. Okay. So what's the doubt? Oh no, he will be taxed. The difference is if you are a resident, your income derived from any part of the world will be taxable. But if you are a non-resident, that means you are not a resident, then only the income that you have earned from UK will be taxed at UK. So just because you are not a resident, it doesn't mean you don't have to pay any tax in UK. If you are a resident, your worldwide income, you will have to pay taxes in UK. But if you are a non-resident, you have to pay only for the earnings that you are taking from UK. Elankesh, are we okay? Right. So I'm coming back to question number 4. What is the tax deducted at source? Okay, I received few answers from Ijaz and Abdullah. Okay, Alankesh, go ahead with answer B. That means PAYE. Azmira, A. Value added tax. Okay, great. So guys, let's have a quick recap on what is this tax deducted at source as well. So, right. So tax deducted at source means you deduct the tax when you make the payment to someone. So for an example, in Sri Lanka, we have a tax called withholding tax. So there what will happen is when you pay the tax to, sorry, when you pay a payment to maybe your vendor, we deduct a certain percentage from that and remit it to the tax authority. So similarly, when the employer pays you the salary, they are supposed to deduct PAYE and remit it to the tax authority. So as and when they make the payment, there itself they make the deduction rather than waiting the taxpayer to wait till the tax year or go ahead with the payment on account or something like that. So that is how the process works. So already I gave the answer for this one. It is PAYE. Answer number B. Question number 5. What is the main source of UK tax system? So in my questions also this has been repeated few times. Even in ACCA's questions this has been repeated few times. All right, Elankesh goes with C. Azmira, how about you? Right, Ijaz, I'll come to that after question number 5. I'll finish off this one and come back to question 3. So yes, I agree with your answer. For UK tax system, yes, I know there are a lot of sources of law, but the primary source for the UK tax law would be the statute or the parliamentary law or the legislation. So answer would be C for question number 5. So coming back to your question, Ijaz, question number 3, he's a non-resident because he seems to be not working in the country. So if he's not in the country and working overseas and resided at overseas means he is a non-resident. Right. So I hope everyone was okay with this very simple set of questions. We'll move on to the next one now. Okay, you guys can see the question fully, right? All 5 questions in section A. Is it visible for you all? Awesome. So let's take again 10 minutes max. Everyone attempt the 5 questions. Then we will have a chat on the, how to go ahead with these questions. Right. Should be okay now, Ijaz, now, right? Great. Okay, guys. 10 minutes from now, try these questions and share the answers in the chat. Then we'll start discussing this one as well. All right, guys, I got the answers from two. Let's start discussing on this one. So, question number one, what will be considered as an exempted income? So, I received answers from Ijaz and Azmira. Okay, Elankesh also believes C. Abdullah, how about you? Okay. Right. Yes. Rents received from a property is taxable. Bank interest is taxable. Profit from a business is also taxable. So the only exempted one would be winnings from lottery. So guys, again, there were certain instances where in your exam also they have tested this exempted income sources in a bit of a tricky way in section A questions. So for an example, recently in your pre-mock, I think, I am coming to that, Telankesh. That's what I'm trying to touch. In your pre-mock, there was a question about these taxable and exempted income sources. So one of them was like Elankesh has just raised NSNI income. So be very mindful about the terms that they are using. So the term on that particular question was not NSNI interest. It was referring to income received from an NSI investment account. Am I correct, Elankesh? They were not saying NSNI interest. They were referring to NSNI investment account income. So NSNI investment account and the interest received from NSNI are two different stuff. So it's like when you want to trade, for an example, let's say you want to invest in the share market. You yourself can go and open an account and do the trading. Or you have another option rather than doing that. You can go with the custodian where you just give the money to the fellow and he will do the investments on behalf of you. So NSNI investment account is something like that. So through a different kind of a account, you are managing your NSNI investments, which is not coming under the exemption. If you directly do a investment and from the certificates, if you are getting an interest, then that is exempted. So if they are referring to NSNI certificates, it is exempted. Correct, Lankesh. Certificate one exempted, but investment accounts are taxable for NSNI. Are we clear with that point? Elankesh, I hope I answered to your question, right? Great. So the others also, guys, be very mindful about the wordings that your examiner is using. So there are so many instances. This was the recent situation. Income from cycle. Yes, correct. So this is the recent example, but there were so many other instances where uh, examiner has tried to play around these words. So he was trying to, get the advantage of the wordings. Even if I was in his position, I would have done the same thing. So because we are testing your knowledge, not how well you are remembering. So to test your knowledge, we should have an idea about whether you exactly know the differences between these different types of investments, which is not coming under tax though, guys, right? Investment is not a part of tax, but yet these kind of stuff we have to have an idea. So that's why I say be very specific and mindful about the wording in the exam. Okay, I have another question. Excluded from CGT. Yes, again correct, Alankesh. Yeah, your point is correct. So everyone, are we okay about these jargons that we might be facing in the exam? Azmira, Abdullah, are we good? Great. So be very careful with the wordings, guys. Because very, very mindful about the words. All right. Right. So we have Judy and Simon, who are a married couple. Simon does not have any income, and Judy has only an employment income of £25,000. Simon selected to transfer his marriage allowance to Judy. What will be the impact on Judy? Okay, let's see the answers that you guys have shared. D, 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 D. Okay. Okay, all of you are opting for D. Judy's income tax liability will decline by £252. Impact on Judy. Okay, there will be no impact on her personal allowance. First one is out. Income tax liability will not decline by 1,260. No. Taxable income will also not get affected. Yes. So the correct answer would be D. You guys are correct. Judy's income tax liability will decline by £252. Good. Okay. Then we have a question about William. So, all right. So William had a profit share of 27,000 from a partnership business. During the tax year, he borrowed £50,000 to purchase a machine to be used in the partnership and paid an interest of 3,000. If this is the only income William has, what is the taxable income for him? All right, they're referring to the taxable income. Okay. The third one, Ijaz is not sure. Azmira goes for C. Abdullah goes for A. Elankesh, D or A? A, right. Okay, so I had few different answers. So first of all, okay, 27,000 is the profit he received, which is taxable. 50,000 borrowing will not have an impact on his tax liability because borrowing is not relevant for us. It's a capital transaction. For income tax, there won't be any kind of impact through the borrowings. But the interest, this 3,000 interest, is it deductible? What do you guys think? 3,000 interest, is it deductible? Great. I got one answer from Elankesh. The others, what are your thoughts? Great. We can take it under the qualifying interest. This is a part of qualifying interest, guys. Because if you guys can recall, we had four kinds of qualifying interests in your syllabus. Out of that, one was borrow some money to invest in a partnership, and uh, the borrowing interest is exempted if it is used to purchase machinery or plant or whatever to be used for the partnership business. That is the scenario here. So that means this 3,000 is deductible. So 27,000 divided by, sorry, minus 3,000 would be 24,000. So why aren't you guys picking 24,000? Any particular reason? Why no one picked 24,000? I know it's not the correct answer, but why it is not the correct answer? Great. So the question refers to the taxable income. right? So taxable income means you have to look into the personal allowance as well, which is 12,570. So 27,000 minus 3,000 minus 12,570. How much is the answer? 27,000 minus 3,000 minus 12,570. This one, right? This would be the answer. Am I correct? 27 minus 3 minus 12,570. Great. So the correct answer would be A, 11,430. Are we all good with this question, the third one? Any doubts or something that you guys want to get cleared? All right, then let's move on to question number 4. So we have Emma, who has a taxable income of 46,000 pounds and received a child benefit of 2,200. How much is the child benefit charge payable by Emma? Okay, so let's see what are the answers I received from you all. Ijaz C0. Azmira, none of the above. Abdullah, 0. Elankesh also goes for C0, right? So with this, let's have a quick recap on whole this child benefit story. So if you receive a child benefit, uh, whether you have a charge or not will depend on the adjusted net income, ANI. So if your ANI is less than 50,000 pounds, there will be no child benefit charge. If your adjusted net income is above 60,000, the entire amount you received as child benefit will be added back to your income. Added back to your income tax liability. But if your adjusted net income is falling between 50,000 and 60,000, then for each £100 increase in your adjusted net income over and above 50,000, 1% of the child benefit you receive will be charged. So in this case, Emma's taxable income itself is less than 46,000 pounds. So does that mean her child benefit charge would be 0? So majority of y'all went with C. So taxable income is less than 50,000 pounds means, does it mean Emma does not have any child benefit charge? Elankesh, what do you think? Are we deciding the child benefit charge based on the taxable income? No, right? We go based on the adjusted net income. So what's the difference? In this case, what's the difference between taxable income and the adjusted net income? Yes. In this scenario, the difference between taxable income and the adjusted net income would be the personal allowance. At the point of adjusted net income, personal allowance is not deducted. At the point of taxable income, personal allowance is deducted. So I have to go backward. So 46,000, I have to plus 12,570, isn't it? Then only I can derive at the adjusted net income. Based on that only I have to decide whether Emma will have to pay any income tax charge for the child benefit or not. So let's see where the numbers are taking us to. Right. So her taxable income is £46,000. I'm adding personal allowance to that. So that leads to 12,570. Once you add it, the net income will become 570. Your limit is 50,000. Excess is 8,570. So that means you have around 85, 8,500 pound slots. So that means 85%. 1,200 is a charge received. So 1,200 into 85 would be 1,020 pounds. So do we have that answer here? We don't have 1,020. So the correct answer would be then what? Answer D, none of the above. Are we clear? Any questions? Abdullah, Elankesh, Azmira, any questions? Wait, sorry. Yes, correct. A is 1,020, correct. Sorry, guys, answer is not D. Answer would be A. Sorry, my bad. Thanks for highlighting, Elankesh. The correct answer is A. That is there. 1,020 is there. Correct. So A would be the correct answer in that case. Are we all good? Right. So guys, like I said again, be very careful about the terms that your examiner uses. So here, everything got changed because the examiner specifically said the given 46,000 is the taxable income. They were not talking about the gross income or the net income. They have specifically said it is the taxable income. So be careful about the terms that they are using in the exam. We are okay? All right, I'm moving on to the last question on section A of this particular one. So we have Sedi, who has an interest income of £90,000. If this is the only income she has, how much will be her income tax liability? Okay. So she's having only the interest income. We just need to calculate the income tax liability. Okay, fine. What should be the first step that we are going to follow here? What's the first thing we need to do? So we are starting from 90,000. What should be the first thing we need to do? Great. First thing is we need to deduct the personal allowance. Super. Then coming back to the tax rates. Is the starting rate applicable here? All right, I got one answer as yes. The others? Azmira,
Yes,
Abdullah?
sir.
Great. Abdullah, how about you? Is
No,
the starting rate
uh,
applicable?
since it's a higher income, so there is.
Starting rate will not be applicable.
No.
All right, great. So coming back, guys, I will agree with Elankesh's and Azmira's answer because, guys, this is a very confusing area for most of the students. So don't get confused. Starting rate does not have anything to do with your level of income. That is nil rate ban. Starting rate does not have to do any sort of a thing with your level of income. Only one thing that you have to check, that is how much of taxable non-savings income you have. If your non-taxable non-savings income is zero, or if your taxable non-savings income is less than £5,000, starting rate comes into the picture. It doesn't matter even if you have billions in your savings income. Still, starting rate will come into the picture if your taxable non-income is taxable non-savings income is less than £5,000. So here you don't have any taxable non-savings income. That means starting rate is applicable. Abdullah, are we good?
Yes, sir, got it.
Awesome. Then let's move on to the excellency. How are we going to deal this entire story? So 90,000 is the interest income. I deducted personal allowance from that, which led me to a taxable income of 77,430. Starting rate, I applied 5,000. So taxable income 77,430 means SEDI is going to be a higher rate taxpayer. That means the nil rate band will be limited to 500. So 5,500 is already absorbed by the starting rate and nil rate. So the remainder from your basic rate band would be only 32,200. And the balance 39,730 will be taxed at the higher rate. So the overall income tax would be 2,332, which is this one. Wait, 332. So it will be this one. Answer C. Guys, are we okay? Can you tackle these kind of questions? Abdullah, Elankesh, Azmira.
Yes, sir. No, it's good.
Great. So guys, again, I'm repeating once more, be very careful about the terms they use in the exam, because especially section A, most of the time will be very, very tricky. So be careful when you are dealing with these multiple choice questions, because if you make a mistake, the answer from that mistake will also be there in your list of options. So be very careful when you are attempting these section A type of questions. All right, now I'm moving on to the next part. Okay, so we have a small section B kind of a question here. Not a very lengthy one though, it's a very straightforward one. So I don't think you need 20 minutes to do this one. It's a very straightforward one, though it's a section B type of a one. Shall we try to do this within around 10 to 12 minutes max? It's a short one, guys. Shall we try to do it within 12 minutes? Can you get a try?
Yes, sir.
Awesome. So max 12 minutes, guys. Give it a try. Even though I have allocated 10 marks here, this is not a very complicated question. It's a very straightforward one. So max 12 minutes, give it a try. Okay, guys, I received answers only from Abdullah, Azmira, and Elankesh. How about you guys? Were you able to complete it? All right, great. Let's go through the question then. So we have Rosie and Benny who are married and has two daughters. Rosie is looking after their daughters, hence there is no any income for her. Benny is working as an account assistant in a small company and received an income of £20,000 from his employment. Apart from that, he received an interest income of 23,000 from a bank deposit, and a dividend of £700 during the tax year. How much is the income tax charged on Benny's dividend income? Okay, let's see what are your answers. Azmira goes for A, Abdullah goes for A. Yes, I agree with you all, because for this one, we don't even need to do any kind of a calculation, right? It's a bonus mark. We already know for dividend income up to £1,000, we do have the nil rate band. That means 700 means this is covered by the nil rate band. So it will be 0. So for first question, the correct answer would be 0. Good. How much is the personal allowance allowable for Benny? Let's see what are the answers you guys got. 12,570, 12,570, 12,570. Right. I agree with that as well, because he is not going more than 100,000. So there is no need to reduce the tax rate, what do you call personal allowance part. We can straight away go for the full 12,570. Good. How much is the savings income nil rate band available for Benny? Okay, let's see the answers. Abdullah goes by 1,000. Azmira go by 1,000. Elankesh go by 1,000. Okay, for that, let's have a quick calculation and see where we end up. So I have just jotted down a small format here. Non-savings 20,000, savings 23,000, dividend 700. So the overall net income will be only 43,700. Once you deduct the personal allowance, your taxable income will be overall only 31,130. That means Benny is a basic rate taxpayer. So if he is a basic rate taxpayer, you guys are correct. £1,000 can be taken as the nil rate band for savings income. Good. Then how much is the total taxable income? We already did the calculation. Let's see your answers as well. So Abdullah goes with answer 31,130. C 31,130. 58,000. Elankesh, your answer is okay. For ninth one, what would be your answer? The one before last one, what would be your answer? C. 31,130. Okay, great. So we already did the calculation. So I'm not going to do the calculation again. We already discussed that. So yes, you can see it's already at 31,130. Good. Then the next one is, how much is the income tax liability for Benny? Okay, what are your answers? 5,634, 5,886, 5,886. Okay, great. Let's see. So non-savings income, we have only 7,430 taxable. So that into 20% would be 1,486. Savings income, we already discussed the nil rate band is 1,000. So that will be taken under 0%. The balance 22,000 will be taxed at the basic rate of 20%. Dividend income, we already discussed the full amount is covered by the nil rate band. So there won't be any income tax arising from the dividend income. So once you add everything together, income tax liability would be 5,886. Abdullah, are you okay?
Yes, sir. So like I have deducted the marriage allowance of 252.
Okay, all right, all right.
So final answer, I got it as 5634. So does it apply over here, sir?
Marriage allowance.
Yes. They both are married and one person is not working.
Mm. Right. So it's a valid question though. You can deduct marriage allowance because both of them are, like you said, both of them are married and one doesn't have an income and the other one is a basic rate taxpayer. We can deduct it, but we can do it only under two circumstances. One, either they have to mention in the question they have elected to go for the marriage allowance
Okay.
because this is not a compulsory one, it's an option given for the taxpayers. So either the question need to say they have elected to go for the marriage allowance, or they can have a general comment saying the taxpayers will use everything in the most beneficial manner. If one of these two methods they have elected, then yes, of course, we can go for the marriage allowance.
All
Have
right,
you?
sir. Yes, noted. Thank you, sir. So if they have mentioned only, we have to consider it.
Yes, either they have
Okay.
specifically mentioned the taxpayers are opting to go for the marriage allowance,
Mm.
or indirectly they have to say the taxpayers are going to follow the most beneficial calculation.
Cool, sir. Got it.
Great. All right, super. The election should be made within 3 years from 31st Jan. Yes, the deadline would be the one that you are referring to, Elankesh. That's correct. All right. So I hope we are clear with this particular question, right? Any questions around this section B question that you guys are not clear? Okay, no sound means I assume we are good with that. Then I'm moving on to the section C question. Again, this is only 12 marks and almost a very, very straightforward question. Can we try to do this also within around 12 minutes? It's a straightforward one, guys, not a very complex one. Can we try to do this within 12 minutes again?
Yes.
Elankesh? Great. Okay. So guys, let's your time starts now. Max 12 minutes. Let's try to do it. Once you are done, please share the answer in the chat. All right, guys. I received the answer only from Azmira. The others, how about you guys? Elankesh, Abdullah, can I have your answers as well, please? Okay. Abdullah, how about you? All right, let's start discussing, guys. We have Rob, who had an employment income of 45,000 pounds. Sorry. And he has contributed to a payrolling donation scheme at an amount of 3,000. He had an interest income of 30,000 pounds and a dividend income of 20,000 pounds. He is planning to make a gifted donation of 15,000 on his birthday, 10th April 2024. It has two components or two parts to the question. One, calculate the income tax liability of Rob for the tax year 2023-2024. So, employment income is straightforward. What are we going to do for this payrolling donation? What would be our adjustment there? Payrolling donation, what are we going to do? QCD, not within the tax year, deducted from income tax. No, I'm asking the first one, Lankesh. The payrolling donation one. So Azmira believes it's a QCD. Abdullah believes needs to be deducted from the income. Okay. Elankesh also believes the same thing. Correct. So guys, for payrolling donations, what we decided was we need to consider that under employment income and give a deduction for that. It's not a gifted. Payrolling donation, straight away you can deduct from your employment income. QCDs comes only under the corporation tax. We are good? Right. Azmira, are we good? Awesome. Okay, so gifted will not have an impact because it is out of the tax year. He is just planning, he haven't done anything yet. So based on these information, first of all, we need to calculate the income tax liability. Let's give a try. Employment income, I gave a working, but the only deduction I have is the payrolling donation. So the employment income was 45,000 minus the payrolling donation, which is 3,000. The employment income comes to 42,000. Then I took the savings income 30,000, dividend income 20,000. So the overall total income would be 92,000. That means we can grant the full personal allowance. I deducted that. As a result, I'm ending up with a taxable non-savings income of 29,430, a taxable savings income of 30,000, and a taxable dividend income of 20,000. Seems like Rob is going to be a high rate taxpayer. Non-savings income, I can straight away fully take under the basic rate band. That is what I have done, 29,430 at 20%. Then savings income, he is a higher rate taxpayer, so you can take the nil rate band as 500 pounds. I took that. So from the nil rate, from the basic rate band, already you have utilized 29,430 plus 500, which is 29,930. So the balance component that we can use would be 7,770. Then the remaining 21,730 from the savings income will be taxed at the higher rate. Then dividend income, as we already know, nil rate band will be 1,000. I straight away applied that. The balance 19,000, I am applying the higher rate, which is 33.75. So my overall income tax liability for up would be around 22,545. You guys get that answer? Right, good. So the next component of the question, what will be the impact on his income tax liability if he advanced the gifted donation to 2nd April 2024? Okay, so if he advances the gifted donation to 2nd April 2024, that means now this is going to fall within the tax year. So forget about the numerical figures. If there is a gifted donation, what are the impacts that it might create on the income tax liability? What kind of impact? What are the areas it is going to hit? Forget about the numerics now. We'll come to the numerics in a while. First, let's try to understand what are the areas which will get impacted. Okay, upfront benefit would be there. Good. Anything else? Increase in bands. Okay. In this scenario, is at all? Abdullah, Azmira, how about you guys? All right. Okay. So I agree with your comments, guys. The 20% upfront benefit would be there. Tax rate band extensions would be there. Generally, adjusted net income might be affected. But in this case, we don't really have an impact on the adjusted income yet. Right? So let's see how we tackle with the full question. Okay, so the amount is 15,000. So we need to gross it up first. So first of all, I have grossed it up. 15,000 divided by 80 multiplied by 100. So once I gross it up, I get an amount of 18,750. Then basic rate band. My usual basic rate band is 37,700. But now as a result of this, my basic rate band will be extended up to 56,450. Currently, the tax that I'm paying is 22,545. But due to the basic rate band extension, 18,750, which should have been taxed at the 40%, now it is going to get taxed only at 20%. So you have a 20% tax savings. That is 18,750 into 20%. So the new tax liability would be 18,795, and the tax savings would be 3,750. Let's see your answers. 3,768, 750. Right. Guys, are we okay with this 3,750 and how we derived on that, or do we have any questions? Elankesh, are you okay with how I derived on the answer? Great. Okay, I got a request to repeat on how I got this answer. Let me just explain it once more. So we already know when you make a gifted donation, three things can be impacted. One, the crossing up part, the upfront 20% benefit, which we took here. The amount that we have donated is 15,000. We divided by 80 and multiplied by 100. So altogether, my uh, gross donation became 18,750. That is the upfront 20% benefit. Apart from that, I have another benefit that would be the extension of my basic grade band. So that also gives me a benefit. Third one, there can be an impact on my adjusted net income, but which is not applicable in this case. Why? Because my income is already below the limit of 100,000. So doesn't matter what kind of impact would be there on my adjusted net income because my tax liability is not going to be dependent on that. So A and I part, we can simply disregard for the time being. So I grossed up, then I figured out how much will be the extension in my basic grade band. So as a result of this, the gross donation amount, which is 18,750, this should have been exposed to the higher rate if the donation was not made. In our earlier calculation, this 18,750 was taxed at 40%. But now, due to this donation, my basic rate band is extending from this amount. As a result, this amount also now going to get taxed at 20% instead of 40. So I have a 20% tax savings on this 18,750. That means the impact on my tax liability would be a reduction of 3,750, which is 20% of 18,750. Are we okay, guys? Abdullah, are we good?
Yes, sir, got it. So basically that 20% is tax savings, 3,750.
Exactly.
Good.
Yeah, good.
Yep.
Right. So these kind of questions has also been there in certain past papers, guys. Like I have been always saying, your examiner will not give you a very straightforward question. Part of the question would be something like this kind of impact analysis or a backward calculation. So we have to get used to these kind of stuff. You could have done the full calculation once more and derived on the same answer, but that will be a waste of time. So these are few shortcuts that we can deal with questions like this. Abdullah, Elankesh, Azmira, are we good?
Yes, sir, all good.
Awesome. Okay, my next question. So we are done with this part as well. Did any of y'all went through the technical articles that are applicable for y'all? Anyone? Did you check what are the topics that they have released the technical articles? Abdullah, Elankesh, Azmira? By any chance, anyone went through the technical articles? Okay, Azmira haven't. Elankesh have gone. Abdullah hasn't gone through. Right, okay. So, right, here itself, let's check what are the topics that we have some good new technical articles. Okay, I'm going to a new tab. ACCA Global. Student support resources. ACCA qualification, taxation, technical articles. Then select what is the stream that we are looking at. We are looking at the UK tax stream. So I selected that. Okay, you have a huge bunch of technical articles, isn't it? Okay. So do you need to go through all this? Guys, what are your thoughts?
So there is a article regarding the group account. Wallet.
Yes. not group accounting technically, it's about group
Groups.
taxation.
Group taxation.
Right. So if I am to explain you guys, yes, of course. In these technical articles, you do have explanatory testing questions as well with the answers. So it's when we were studying, guys, that means around 10 to 15 years back in those days also, these technical articles played a huge role when it comes to the exam success. I know even when I was a student, I also did not take this whole technical article story that seriously. But for few subjects, I use that. But later on, I figured out when I actually use that as a student, I figured out that this thing is much more easier to understand. So these technical articles, I would say, very effective compared to the normal stuff, the study materials, or textbooks, study hub, tutorials, the YouTube videos, whatever other stuff that you are referring, compared to all those stuff, these technical articles would be much more simpler and easier to understand. That's why I'm taking few minutes to explain this technical article story. Guys, take these technical articles seriously. Because there were so many instances where whatever they have mentioned in the technical articles, in the recent past, some questions were taken into the exam on those areas. And certain questions were obviously in line with the technical articles as well. So please take these whole technical article story very seriously. So even okay, there's a question with a doubt. Drop me one to one, Elankesh. I'll attend to your question separately out of the class. Right. Coming back. So this whole technical article story, please take it seriously, guys. First article itself is very vital. That speaks about the changes in the Finance Act and what are the important features of the new Finance Act. So I know Elankesh went through this because he has raised some questions with me on this article. Yes, that one I'll share, Azmira. So, what am I trying to say is, first article, especially that is very important because that gives you an overview about the changes from previous Finance Act, that is 2022 to Finance Act 2023. So, this one is compulsory, guys. Please go through that technical article. There were some good illustrations around the new additions as well. Please go through that. Adjustments to profit, again, not the most important one, but better if you can go through. Benefits, we didn't have major changes from the previous Finance Act. So if you have time, go through on these two as well. Chargeable gains and the groups you have to go through. These three you have to go through. First one, chargeable gains, two articles, and groups. Go through those three minimum. Sorry, those four minimum. Oh, yeah, at least go through those four, guys. But I want you all to go through as much as possible. But minimum those four, please go through. Can we do that before the next class? Before the next revision class, I'm referring. Right. Then the other one is, guys, uh, another area which you guys really don't care too much about, that is examiner's report. From the same path, just above the technical articles, you have the examiner's reports. If I go to that, you have something like this. You need to select the variant. So we are talking about the United Kingdom one. Which one are you referring to, Lankesh? The examiner's report are you referring to? Great. Yes, true. So guys, this is another area which is, I would say, a very good resource, but we are not using at all. So be serious about these examiners reports as well. I mean, you can see for almost all the sessions we had in the recent past, you do have the report from the examiner. So at least the recent three, please go through and have a look at. Like Alankesh said, they are going through some questions as well and explaining how those needs to be attempted. And what most importantly, two things. What your examiner is expecting from a question like that, and what are the common errors that a student might make in that kind of a question. So these two are very vital. First one is of course crucial because we are addressing to the requirements of the examiner anyway. So if we don't know what he is exactly expecting, then we are going to lose anyway. Second one, if we know what are the exact areas that people has gone wrong before us, that will definitely help us to make sure that we don't make that mistake. So now we have around 1.5 to 2 weeks for the exam. So it's still not too late. Please start focusing on examiners reports, as well as the technical articles. Can we do that, guys? I know Elankesh is already doing because I'm getting some questions from him. Abdullah, how about you?
Yes, sir. Definitely, I will go through it.
Awesome. So, guys, these two might be game changers, even for me for one paper. That was FM. I was really struggling with few topics of FM. Unfortunately, those days examiner's report was not there, but for those two topics, we had some good technical articles. So thanks to those two, I was able to clear the paper. Last moment, I went through those technical articles and it helped me very much when it came to the exam. So with experience, I know these technical articles are going to play a major role when it comes to the results. So please do take it seriously. Try your level best to go through the technical articles and the examiner's reports. So these are really, really good two resources that they have provided. Let's count the full out of it. All right. Okay. So for today, let's stop at this point, guys. Like I said, it's going to be a 2-hour class today. We'll catch up on the next class. We'll have one more revision class with y'all next week. And let's try to do a couple of more mock questions. And if possible, we'll try to do some past papers as well. But for that, I think they have already given you the access to recorded sessions for past papers. So you guys can easily access through that as well. And the pre-mock, we will be releasing a recording on that as well. You guys can access that, the pre-mock one. I have already done certain questions on pre-mock. I will definitely complete it by next Monday or Tuesday. So they will upload everything to the portal. We are good? Alankesh, Abdullah, are we okay?
Awesome, sir. That's good.
Great. How to access the portal? Portal in the sense I'm referring to LMS, Alankesh. You do have the access to that, right? Right. So in your LMS, they will upload everything. By now, except for the pre-mock, everything else should be there. So just get in touch with them on the rest if there is anything. And like I said in the previous class also, guys, the tax paper discussions, don't take the corporation tax parts and the tax rates ones because those two changes are there. The rest is fine. We are okay?
Yes, sir. Looks like I don't have that for exam papers. I'll check with the team.
Sure, sure. Great. So, pre-mock also will share with you guys ASAP. I have already started doing the recording on that halfway through. Okay, so let's catch up on the next week on the last revision that we have.
Which is on next Tuesday, right, sir?
Yes, next Tuesday, correct.
Cool.
So this week I had to postpone this thing, guys. What do you call the revision class? This week I couldn't do because we had the ACCA AGM. I was unable to skip it because I got the privilege of being a part of the member network panel this time. So I had to attend the AGM. That's why I had to cancel or postpone the class at the last moment.
So
Sorry
that's
about
really great. No, that's really great, actually. You were in the
that.
panel.
Thanks a lot. Hopefully we can do some good new things in future.
Definitely, sir.
Great. And just for your knowledge, we have created a student committee as well. Through ACCA, you guys will get the additional information about that. If you guys are interested, just drop me a message on joining the student committee of ACCA as well.
Yeah, sure, sir. Mm.
Great. So with that, okay, Elankesh has one question. After changes, corporation tax has become a yes. Corporation tax has also been become a progressive taxation method now. True. Okay, guys, let's catch up on the next week on the next revision. Thanks a lot for the participation. Take care, guys. Good night.
Thank you, sir. Bye.
Bye. Yeah, Lankesh, anything else? Yeah, can be. Yes. They might put it as a part A question. Yep.